Sorry, I had 27 windows open. You guys ready? Who's ready for some Forex? Welcome to Forex.Today, the YouTube channel of more than 18,000 foreign exchange traders. We gather approximately 8 a.m. in the morning New York time, 90 minutes before the news. Today is CPI. Very cool. So let's get on with it. 3, 2, 1, hit it. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for a little tiny broker called TradersWay.com. Why is that important? Because they want to earn your loyalty and respect. When was the last time that happened, huh? When was the last time you went to a car dealer and they're like, hey, can we earn your loyalty and respect? So anyways, hey, how about someone that values your education because they want you to succeed? Why would they want you to succeed? You'd be a better client. They'd make more money if you were successful. Huh? Isn't that cool? Huh? So they want you to be successful. So in all seriousness, what that means is you have to be able to know absolutely everything and accurately predict the future every single day. All right, so that's going to take a little bit of effort on your part, but I'm here to be your guide on this journey we call Forex. So please ask questions, get involved, and please open up a demo account at TradersWay.com. Like I said, ask questions, get involved, take notes, write things down, have strategies, have plans. For example, every Sunday/Monday when you come to your charts to start the week, you should have already identified at least two things. Actually, no more than two things, I should say. One or two things you should have already identified, very specific things that you're going to work on this week to improve at. Okay? Things like maybe stop management, maybe when do you pull the trigger, what tools and techniques do you use to pull the trigger properly, all this kind of stuff. Very, very minute things. Well, how did you come up with those two things? Well, you reviewed every single trade that you made last week. You reviewed it over the weekend, identifying strengths and weaknesses. What did you do well? What should you have improved on? What would you do differently if you had the chance? That kind of stuff. And you say, okay, well, here's my strengths. I'm going to celebrate those. But where are my weaknesses and what can I do to work on them? And that's what you should be doing this week. The analogy here is you could golf once or twice a week for 30 years and still suck at golfing. You could sit here and trade and trade and trade and trade and trade and still suck. So instead, you should get a coach and work on very, very, very specific things. If we're still talking about golf as an analogy, I would start with how do you stand? Do you have balance? Do you have flexibility? How do you grip your club? And you're like, man, I want to hit the long ball. Like, dude, you don't even hold your club right. You don't even know how to aim. So why would we be pulling out the driver? Let's work on putting. Okay? So anyways. That's what the Wayne do. Cool. I wrote a book on that subject, by the way. Cool. So anyways, welcome. Thank you for the thumbs up, so on and so forth. By the way, did anyone participate in yesterday's part 2 live stream? Remember, part 1 got abruptly interrupted. And I said I'd make it up to you. So, I don't know, an hour or so later, I came back down and started a second webinar for yesterday. We sat around for I don't know, hour and a half and listening to music and just trading. And I took profit on, I don't know, 600 pips, I think. 600 pips, I think I put in the pocket. So it was all right. It was all right. I still have a few farting around here. I'm still up 1,350. Okay. So, yeah, that's all. So you might say, well, why would you do that? Well, let's review this. What is the logical, intelligent trade, for example, on this pound? This is one I talked a lot about in the swing trading group last week. The proper trade is, if you're a bull, of course, is to be long here. I critiqued a trade that was, I don't know, it was here maybe, somewhere in there, 39-ish. And I said it wasn't a good trade, that there were probably some better, well, there were definitely better trades to be on. Okay, so anyway, so we're talking about like this is where you're supposed to be. This is really mediocre because we're lacking so much of a trend. See, right? Yes, we have some biases and stuff, but this is really hard since we're talking about February, right? March and April, by and large, nothing has happened. So for you to make a trend trade on this in here, it's really mediocre. That's all, right? Even if it made money, it's still mediocre, right? So anyways, but we have several FX boot campers, swing group members that are on that. The critique was, okay, I know what you're doing, but there were better trades at that time. Okay. Now, why did I get out of trades yesterday? Things like this. Okay. The conservative trader would exit here because this is the projected high for the month of May. Now, you might use seasonality and some other things and say, whoa, well, maybe I'm going for the June, maybe July target. Yeah, that's true. So that is true, and you can make that decision, okay? But because on this particular pair, for example, I don't identify a strong prevailing trend, I kind of feel like you're on a raft in the middle of the ocean with no prevailing wind and very little current. Okay? All right, Thomas is killing it. Right on, Thomas. Thomas, are you in the swing trading group? But anyways, congratulations. Hopefully you're in the swing trading group as well. Okay. So anyways, when I look at this, it's a topish formation. Why not book some profit? You know, that's all. And one of the themes is, you know, I'm in the trades not for glory. I'm supposed to do my job and just make money. And if the trend is going to prevail, I'll have some dips along the way. Okay. Don't worry about that. Don't worry about that none. Okay. Now, the inverse of that is this was my trade plan, right? I caught a little breakout trade here. My entry was here, and I took profit right about where we are now, give or take about 10 or 15 pips. And here's the interesting thing about this whole kit and caboodle. This is that. This actually says take profit here. So what did I do? W did WD. WDWD. What did Wayne do? I exited based on my plan. Now somebody else said, but Wayne, aren't you going to hold it till June or July? I'm like, yeah, I can always get back in. just doing my job. Okay? Right? So here's the other way to think about it. So yesterday, again, I'm using $600 as a substitute for 600 pips. But I invested about how was I going to say this? Per $100, I turned $100 into $600. Anyways, if you break this down, okay, I made probably 1.5% for the month, right? And I'm trying to do 3 to 5% a month. And I also, and by the way, I'd like people to confirm this. Okay? And this is in particular for those in my swing trading group. I said May is probably going to be sideways until the end of May. The first 2 to 3 weeks, I'm sort of neutral, and I'm waiting for the stock market to come down. How many can confirm that we talked about that, let's say, 3 weeks ago? That I'm not expecting much out of the beginning of May. I want to be aligned by the end of May, and I'm expecting profit taking in the stock market. Okay? I don't mean yesterday or Monday or Thursday of last week, but I mean 2 or 3 weeks ago. So I have this in the back of my mind where I got the trades that I asked for. Okay? So with that sort of built-in biasy, if I was disciplined, I would execute the trade that I planned. Oh, but Wayne, it could fall more, it could fall more, it could fall more. Well, if it falls more, I'll look for a low-risk, high-probability trade I can pull the trigger on. But right now, I already did, right, the low-risk, high-probability trade. It gave me exactly what I expected. And I'm halfway through the month, and I'm halfway to my target. So I'm like, okay, great. But I could have made more. What's the point of that? I don't even understand the logic. You could have. Yeah, sure. For sure. Okay. So anyways, yeah. Okay. Cool. I expect more out of June than May. So right now that I've cleaned the slate a little bit, I want to get ready for the next trade. Okay, cool. This was another one, okay? So I exited, I think, in here on this trade. Okay. Okay. So I exited there. That seems to be the right decision. Cool. Nice. I didn't even remember I had the stop here. And I'm like, this is my line in the sand. And then something happened up here. And I'm like, you know what? I'm going to be a man. I'm going to put my big boy panties on. Right? My Spider-Man panties. And just do what needs to get done. Boom. Give me my money. Give me my money. So anyways, that's cool. And then euro dollar, I also exited this yesterday. Somewhere in here, I believe. Wait, that's a 5-minute. Well, that looks about right, though. Okay, anyways, somewhere in there. And that looks like the right thing. Now, has it declined significantly? No, but I got money in the bank. Okay? So that's what I'm trying to show. I asked people yesterday, I said, is anyone struggling with discipline? I got out of winning trades at the top. Well, how do you get out of a winning trade at the top without having it retrace significantly to tell you that I might be over? Okay? I've always said that to go from a good trader to great trader, and I'm not saying I'm a great trader, I'm just saying the difference between a good trader and a great trader is really knowing when to stop trading and knowing when to take profit. Meaning, a good trader might make 4 profitable trades in a row, and then the 5th one is a loser. A great trader will make 4 profitable trades in a row and stop trading. Okay? And the difference is the good trader, 4 winners and 1 loser, the thing is, probably had to work an extra 2 hours a day and made 20 to 30% less money. So how'd you like to work 30% less and make 30% more? And that's the difference, right? And so what I'm trying to say here is instead of adding yesterday, I subtracted. And by doing so, I made more money because I didn't give back, nor did I take a loss on a new trade. You see, the psychology is a little strange there, but you'll figure it out. And if you don't figure it out today, you'll figure it out someday, and you'll say, Schnicker schnacker, I get it now. I know what he's talking about, because I'm Canadian, right? I know what he's talking about. So anyways, I got out of this because of Aussie. I'm pretty sure it was Aussie. And CAD being on the target, right? So if CAD can't fall further, why the heck would euro dollar go higher? You know what I think? You get it? Cool, right? Cool, right? So that's the whole discipline. Okay, that's the whole discipline thing. And sure enough, yesterday dollar was ridiculously weak, and I'm selling dollar, and then I stopped selling dollar. And now it's strong. Boy, does that feel good, huh? That's the best part of trading, in my humble opinion. It's not being right on getting into trades. It's being right getting out of trades. I'm telling you, that's the best feeling in Forex. Because after a while, I mean, if you spend your whole day doing research and you put money down on a trade, you expect to make money. So if you make money, you're like, well, that's what I expected. So there's very little glory, right? But having to make a tough decision like, dude, I'm on these kick-ass trades, but it's top-ish. It could go further. It might go further. Seasonality says, but in a month it'll be higher. What should I do? What should I do? And you're biting your fingernails. And you're like, oh my God. Okay, I think I'll get out of this profitable trade. And you get out, and the whole thing collapses. And you're like, oh my God, that feels so good. Oh, that feels so good because I didn't know, but I did the right thing. I'm telling you, that's where trading feels good. Not being right. Okay, think about it this way. Every professional trader is profitable. So they're not really surprised. And, you know, and if you sit here for 20 years, you're like, well, one year you made 30%, the other year you made 50%, and the year after that you made 40%, and then it was a real tough year and you made 20%, followed by a great year and you made 60%. And, you know, after a while, you're just like, dude, I've been sitting here in front of my charts day after day after day, week after week, month after month, year after year, Fed cycle after Fed cycle, real estate cycle after real estate cycle, business cycle after business cycle, political cycle after political cycle, you know, central banker after central banker. And then, you know what? It all just blurs and blends. Pretty soon this is what you do. So the only surprising part of it is when you make a tough decision, and that tough decision is either take the loss or take the win. Everything else is very straightforward. Right? Right? Greg's got it, huh? Kicking butt. Good job, Greg. Gregers. Cool. Ahmed said, would you counter trade on your profit taking? And I answered that yesterday, and the answer to that is no. I'm not a counter trend trader. I'm a trend trader. Okay. Okay. Remember, my alpha isn't to make as many pips as I possibly can. That's not what I would promise a client. What I'm trying to provide as a value to a potential client is low volatility and consistent returns. Okay? If I'm trading both ways, yeah, I have the opportunity to make more pips. I also have the opportunity to make less pips. Yeah, I mean, because now timing is such an issue on both sides versus providing a product to a customer. Because, when you work with a wealthy individual, small business, small institution, like you guys are going to work with one day, they have a business need, really. And they're like, I need you to hedge my exposure to euro. Okay. But right? So there's a reasoning and a logic. It's not just, I'm going to trade my Forex account. I'm going to make as many pips as I possibly can. Some months are be huge. Some months are not going to be huge. Some months are going to be losses. Generally, that's not what a business or a wealthy individual wants. So they prefer the consistent returns and low volatility. And if you can provide a steady income stream from that, in particular one that on the long run competes with the stock market, in particular when the stock market's down, you're still making money. Like, think about it this way. Some people may have had a decline in their stock portfolio this month, right? We're now in day 3 of the stock market coming down or something. So if the stock market, if your portfolio, let's say since the beginning of the month is down, let's say 3 or 4%, well, I could say, well, that's interesting. Since the beginning of May, I'm up a couple of percent. And the difference is a lot. Now, you'll say, well, dude, that's chump change, Wayne. What the hell are you talking about? 2%? And you're all bragging about 2%. What about, I'm up 20%, right? Well, again, when you look at risk reward and tolerance of the psychology, you're putting yourself in a situation where you might be up 20%, let's say, for the month of May, and we're only on the 12th, but you probably don't have any money. Like, you're turning $10,000 into $12,000. You didn't turn $10 million into $12 million. And if you took those types of risks and use that kind of leverage and put that, and you got that kind of volatility, like just think of your Sharpe ratio and stuff. And a wealthy client that would give you $10 million to trade with doesn't want that. They don't want that. You see, like they just don't want that. They're like, oh my God, your numbers suck. You're like, what do you mean my numbers suck? I'm up $2 million. They're like, yeah, but look at your volatility. Look at the Sharpe ratio. Look at the potential for loss. Look at like, oh my God, like what if you lost $2 million? You're like, well, then I'll make it back in the next month. Well, what if you lost another $2 million the other month? Like it was bad. It was you were very unlucky, but ultimately you lost 40% of my freaking account. Like people don't want that, bro. Right? It works when you got 10 grand, not 10 million. So I'm trying to teach you to think, hey, if someone gave you 10 million and you only produce 2% a month every single month, you're actually the number 1 commodity trading advisor in the United States. Think about it. If you can do that month after month, every single month, 2%, 2%, 2%, you are, right? I'm telling you, you are the best commodity trading advisor in the United States. So if I'm saying 2 to 5%, I'm the one that sounds stupid because That's way too much. That's ridiculous. I must lower my leverage even more. Okay? And right, but 20%, right, is just way out, as they say. Way out. Cool. Okay. Yeah, that's cool, Greg. And Greg, that's a message I've given people for years, is that Forex will fund whatever that you do. If you want to start a nonprofit organization, if you want to help your community, if you whatever, right? Forex will fund that. For sure. Okay, coming up on the CPI any second now. Okay, we're looking for an extraordinarily high number. And if we don't get that, things will be good. Looks like it's probably out now. Do we have a headline? Still hasn't posted unless I'm doing something wrong. What is it? It's high, right? Hang on, I got to just shut that. It's in the way. Yeah, Greg, that's right. Yeah, 1,000 into 5,000. Yeah, that's fine. Okay, dollar's strong. And let me show you something. Okay, you see this? I was long yesterday, got out at the top. You see this? I was long yesterday, got out at the top. You see this? I was short yesterday, got out at the bottom. Right? See here, yesterday we're at the top. I said, get out. Awesome. Awesome. See, I'm loving it. I'm loving it. I'm loving it. Feels good. Thing is, are we going to get an opportunity to buy a dip? So let's take a look at the euro. And what do you think? What are you going to do? Okay, what are you going to do? It's out of position to begin with. Okay. And we're breaching the 4-hour 21, so that's the red flag, right? If you're a swing trader in my swing trading group, you know exactly what I mean by that. Okay? So, are you going to buy a dip, that kind of stuff? I would you don't have to be like the first one in. I'd almost like to see it head down to like even below 120. But we're at the 50 mark right now. This could be a buying opportunity. I'd like to see it come all the way down. The more, the merrier. Okay. More, the merrier. And, did my account log out? Yeah, it keeps logging me out. Stupid. All right. I want to check. Hang on. Love it though, huh? There's right. You paying attention to this cluster here? Pay attention. It's a right 50% decline. Very cool. Just kind of looking at world markets and stuff. Interesting. Beautiful. Love it. I'm so happy. Right? Gorgeous. Oh my God. Every pip down is a pip that I put in my pocket yesterday. Again, discipline, right? Okay, so let's take a look around the world. Oh, let's do yens. Cool. Very nice. Okay, very nice. Once again, let's talk about this. This is a position open and a position exit. This is the conservative target for May. Lovely, right? Check that out. Conservative. Okay. Mediocre May. Very cool. There's our Aussie. Okay. This had more potential just like euro dollar. Last month. Okay. Check that out. Isn't that beautiful? Entry. Look at target. It actually says it, right? Bullish profit zone aggressive. That was the top of April. Look at the accuracy. Nice. So your decision-making process is, do you buy the dip? Well, I'll break it down in pieces. Plan A would be normal price action. Plan B would be abnormal price action, right? And you'd be setting up in June. So is it A or B? Is it pink or is it black? Dr. H says he bought. No, what I did is I bought on Sunday, right? I bought on Sunday my swing trade that we set up on Thursday, and I took profit yesterday because I felt there was a top, or let's say an end to dollar strength, or I mean weakness. And then since I've gotten out, we have dollar strength. Yeah. Okay. All right. Anyone going to answer that? Pink or black, or are you just trading? I guess you're just trading, right? Too busy. With your smile so worn and your teeth so green. All right, so CAD's trying to take it. Okay, once again, out of position, but we're riding the 4-hour 21. Exactly what a swing trader would be hoping for. Actually, even I'd say even unbelievable, but with commodity prices so high, shortage of gasoline. Like, for example, in my city, I went to a gas station yesterday, and they didn't have any gasoline. All the pumps were closed. So I went to another gas station, and there's about, I don't know, let's say 12 pumps. And there must have been, well, for sure, dozens and dozens of cars in line waiting to get the gas. I would imagine well over an hour wait, maybe hours. So, with commodity prices that high, if you have any of the commodity, you can sell it. The problem is you might not have it. So I was doing some research on the pipeline. So somewhere, let's say in Houston, the gas line starts, right? So the oil comes in, then they crack it and create product. Okay, so gasoline, let's say. And they're going to send it to Boston, let's say. And it's in a pipeline. And it moves 5 miles per hour. So you can guesstimate what, right? You can guesstimate when Boston gets its gas back. Oh, it's a meme? I didn't understand your joke. Yeah, sorry. Right. Cool. Yeah, Joe. Joe, that's interesting, right? Here's the point I'm making, Joe. We made decisions assuming this would happen, but we made those decisions last year. When I was talking about a reflation trade in April and May of 2020, this is what I'm talking about. So the fact that it's happening now is like, well, of course, that's last year's trade. Stock market's back up. Oil went from zero to something more than zero, right? That kind of stuff. Like CPI has gone from negative to positive to growth, right? Yeah, well, we spent trillions of dollars. Once again, I'd say, of course, but under these circumstances, you would say, oh, I should have bought the stock market a year ago. Well, what I was talking about a year ago was that none of the data exists yet. I want you to think about this. This is to everybody. I said, none of the data exists yet, but the market is making investment decisions with the assumption that the data will show itself in 6 to 12 months. We have negative inflation, negative GDP, 10 million people out of jobs. So you should buy everything you possibly can. I didn't say that in March. I said get ready in March, but by April we were buyers. Can anyone confirm that this is the God's honest truth? Or am I tweaking it to look good? Okay? Everything is down. Everything is bad. So you should be buying. Not out of a guess, but out of a policy change in the White House government and a policy change at the central bank. And based on that, I was saying you must think about the data, the consequence of these changes, and whether you believe they will show up 6 to 12 months in advance. You buy now, not because it's low, but because of the policy changes and what the policy changes will do over time. And if you wait for the data to show up like, oh my God, we have inflation. Yeah, well, we made the inflation trade a year ago. So now you got paper stack, right? Boom. There's all the money you made because you were thinking 6 to 12 months in advance. Right? That's the pay. That's the play, man. That's the play. That's the play. That's how you do it yesterday. Okay? Yes, MGM Grand was one. Carnival Cruises was another. But I explained why MGM Grand versus a different casino. Okay? So it's just about thinking ahead, yo.
Hey, listen.
Right? Thinking ahead. Okay? Thinking ahead. Look at that. Boy, that bounced out. How beautiful is that? Cool. Catch it later, brah. All right. Let's take a look. See what's happening here. Okay. Someone bought the 50% dip. Cool, man. Cool beans. Is that right? 8X ain't bad. Hey, did you hear about the managing director at Goldman Sachs? He quit his job because apparently he threw a bunch of his personal money on his personal account on Dogecoin. and made so much money that he now is quitting Goldman Sachs. Because, making $3 million a year at Goldman Sachs is just not good enough. And they're like, he made a substantial amount. Dude, can you imagine if he dropped, $100K on that and pulled out 80 million? Okay, look at this, guys. Oh. Yeah, good. Fine. Yeah. Commodities. I guess we should just go through the rotation. WTI back up on high. Thank you, WTI. Okay. And remember, WTI and what's going on with the pipeline are two different things. Demand for raw crude hasn't changed. It's supply of gasoline and other cracked products. So you take gasoline and you can make jet fuel, plastic, tar, all of which now is in short supply. So, for example, you may have tracked yesterday that airlines have been putting more fuel in their planes as they fly from the west to the east. And when they get to the east, they unload the excess jet fuel. Now, I didn't know you could do that. How do you right? But what they're doing, maybe they don't unload it. Maybe I misunderstood that part. But what they're doing is they're getting permission from the FAA to put more fuel in the plane than what's required. And now there's weight limits when it comes to flying an airplane. If you don't know anything about physics, there's certain ratios that will either make you fly or slam into the ground. And so the government likes to make sure that planes can easily fly, right? So anyways, they've been asking to say, hey, can we carry more fuel than normal? And so they're getting closer to sort of the event horizon where, if you have 1 gallon too much jet fuel, you'll just crash and burn in a fiery death. They're like, okay, you can get a little closer to that threshold, right? And because when they get to like LaGuardia, there may not be any jet fuel. Right? So if you can't refuel, you got to have a little more in the tank. So isn't that interesting? I don't think they get there. At first, I understood it that they were offloading the fuel, but I don't think you can get outside of a 737 and like siphon gas out of the tank. Right? One day you're flipping bags into the containers, and the next day you're sucking on a hose outside of a 757, right? Where'd you get that? It's part of my omnipotence. But you can defuel? Is that real? Is that there must be a pressure valve or something, right, for that? How interesting. He got ambition, baby. This week's the mop, next week's the fries. Anyways. Yeah, you can, huh? Oh, is that right? Southwest, no kidding. So you know your 737, huh? So Wayne's like, how do you know that? Did I break the secret? I'm not sure if Southwest is doing that, but I know a couple other airlines are. I live in South Atlanta, Wayne. So yeah, I'm surrounded by Delta pilots. Right? But that's interesting. So it's in case it's overpressured, I guess they have to have a way to drain it, right? And I guess you can too, of course. Like if you were going to crash, right, Wayne? If you were like going to crash land, you would dump the fuel, right? So there's definitely a way out. How interesting. That's true. Yeah. Oh, well, boom, right there. So we say the same thing. Hope's got the Skyhawk. Yeah. Yeah. String attached to the bottom, right? That's cool. Yeah, what's the glide ratio on that Skyhawk, right? Like that's a plane like you're like, "Oh my god, our one engine stopped working." Don't worry about it. We still got 3 hours of glide. Right? Oh, a 737 can't dump, but on the ground we can defuel. That's really cool. Yeah, the bigger planes I know you could. Yeah, Jimmy's got the Cardinal. It's in his tree in his backyard, I think. Yeah, you like the wing on top. Well, the visibility, right? So I tell my son and daughter have flown the 172 a couple of times and gliders as well. And I'm like, look, the best thing about this 172 is the visibility. When you're on the ground taxiing around, hey, it's level. It's like driving a car, and you can look out your window, and what do you see? You see the ground. Hey, great. And then one day you're going to want a faster plane, and the wing's going to be at the bottom, and you're going to look down, and what do you see? Wing. And then when you're taxiing, what do you see? Sky. Because the front is higher than the back. And you're like, and all of a sudden it's like driving a Lambo. You're like, what the hell's going on? Where is everybody? Right? You got the door open. You ever guys tried to drive a Countach? You have to have the door open to park a Countach, right? Yeah. We're on. That's going to happen for sure. I'm also looking forward. So I've seen prototypes, and I know a friend of mine's investing into a couple of these companies, but they're building solar boats, which just makes sense. You know, like a yacht, right? Yeah. Aussie once flies the ambulance. No kidding. That's cool. Victor says you can. You can land and defuel. So, okay, I understood that correct. So, there are airlines in the United States flying into the East, right, with extra fuel and defueling. Okay. That's very cool. Thank you for sharing, guys. We have such an interesting crew. I like hanging with you guys. You're good people. That's cool. Right on. All right. So anyways, WTI, my oh my. Don't think pipeline. The pipeline doesn't carry crude. Okay? It carries product. Okay? Cool. Michael's like, we're okay. Well, you know, we need our cigars and cocktail. I'd like to do live stuff with you guys. I'm really ready to get going again. Okay. Goldie kicking off the 382. Guess I can make this a little more accurate. Not that it matters that much. No, but when the weather improves, I'll do it again. My wife reads my Barron's magazine. I haven't opened it up in a while. Right. She's smart. She's good with money, but doesn't really follow markets much until more recently. She's asking a lot more questions, and so we have conversations. So I'm not joking. Early this morning, I'm on, right? We're just getting out of bed. My butt's still on the side, feet on the floor. I'm hunched over like a 90-year-old man. And we're talking about the markets because I'm staring at my phone. I'm like, yep, markets are down again. And she's like, that's just like you said 2 weeks ago. And I'm like, yeah, Yeah, I know. So I've been, positioning myself and buying. But I told her I bought a couple of stocks yesterday, 10% off the top, and this is our conversations, right? Right. So it's interesting to be able to have such good conversations. But I haven't been reading the Barron's, and I only read the Barron's magazine really to pay attention to the interviews at the back of the magazine. I don't read any of the articles, right? I don't read the articles. Like, I don't care what someone thinks about a stock. I don't care what someone thinks about a bond. I don't care what someone thinks about commodities. So if somebody says, "Oh my God, copper's up 10 million%," I'm like, yeah, okay. It's only interesting now. But where were you a year ago? If you were a professional trader, how many people here remember, I don't know, 6 months ago, I guess, maybe at the beginning of the year, I said I was looking for a mutual fund or ETF that focuses specifically on metal prices? Gold, copper, palladium, lead, steel. Does anyone remember that? I brought it up a couple of times. I actually asked for advice. People sent me a few emails. Check out this, check out that. Okay? Yeah. So now somebody opens up Barron's, and I'm not picking on Barron's. Barron's is probably I would say is the best out there now because everything got so bad as far as media is concerned. But now you're like, oh my God, copper's at an all-time high. That's amazing. I'm like, it's amazing if you're a professional, because who reads Barron's? Novices? No. So I'm like, it'd be amazing to me that we had fiscal and monetary policy that we had, and you didn't expect inflation, and you're a professional trader, and you're like, wow, I never even saw that coming. You didn't see that coming? You didn't see a shortage in supply and an increased demand pushing up prices? You didn't see that? And you're a professional trader? It's like, oh my God, my stomach is so tight from laughing, right? It's so funny. You're like, what did you think would happen? And this is me laughing at the professional trader that is reading it in Barron's going, boy, I wish I should have known that. See, that I can predict. The Dogecoin going from 0.00125 pennies to 70 pennies, up 70 million%. I can't predict that. I'm sorry. I don't know how it goes from zero to hero because I don't know how to derive the value. But when it comes to supply and demand and the physical needs of the world in an expansionary or contractionary global economy, well, those are fairly easy trades now, right? You know what I mean? That's easy. I understand that. I can just do the math and go, oh, well, that's easy. Boom. Right? Okay. Okay. So now, obviously, it's quite late in the game, but here's the thing: copper isn't at an all-time high right now, and it could double. Okay, but now you're going to have to make your own decisions on that. Can it go from an all-time high to doubling? Yeah, it can. Will it? That's your alpha, right? That's your alpha. You have to make those decisions. Okay? Cool. Take a look at some indices. CAD up, euro trying to recover. Aussie, yen, good yen, good. Dollar trying to recover. Right? Pig is up, Kiwi's down. So a bit of a mixed bag. So Asia Pacific down. The only thing up is CAD and pound. Pound, we're trying to see. There's a bit of a catch up going on with pound. It's the most lagging major, I think. Meaning, I'm not counting dollar because I want dollar to be weak. I'm not counting yen because I want yen to be weak. But if you were to look at like Aussie, Euro, CAD, Kiwi, for example, right, as competitors to pound. Pound, because they were probably quicker to the lockdown, quicker to do a second lockdown, quicker to do a lot of different things, they actually were shut down. But because of that, their data is worse. Okay? That's very short run to only think 1 year. That's all. You're only looking at 1 year. You're like, when? I only look at 2 days. No. So if you look at what they did over the course of a year, they were more aggressive, faster to move, lockdown, whatever, right? Suppress the economy, where maybe like Europe, for example, just sort of farted around and had less bad. But remember, less bad isn't necessarily good. So because Great Britain shut their shit down hard, I'm only swearing to emphasize, right? They'll be the first out. Or let's say relative to Euro, right? They'll solve their problem quicker. But to do that, they had to have short-term pain for longer-term gain, which is called investing. So they hurt their economy more than, let's say, France did. And because of that, their data is a laggard, right? It's less good, let's say, relative, or more bad. But I think the prediction now is next year, Great Britain, Great British Pound, the whole UK, will be doing significantly better than mainland Europe. Italy will still be negative. Ireland will be negative. Portugal will be negative, right? Germany will be flat. France will be negative, right? And so who will kind of win? Probably the Dutch, okay? And I think part of the problem right now out of the Eurozone in general is probably car sales. Right? Thank you, Maida. Thank you. I appreciate that. Right? So maybe pound is the better trade now, right? But like, when is Ireland, France, Portugal, and Italy going to get back to normal employment levels? Okay. And Holland's economy, for example, is not necessarily dependent on exporting cars like Germany is, right? You got Volkswagen, Audi, Porsche, Mercedes, BMW. Okay. And I don't know if demand is high right now for cars, but we also know supply is low and all that kind of stuff. So if Germany has their plants shut down, they're not going to be exporting cars. Okay. So which will hurt next year's sales. But the UK, I don't know if you buy a Rolls Royce. Does the UK make any cars now besides Rolls Royce? Don't say Range Rover, right? So I don't know, right? So I guess pound is probably the better trade. Okay, so here's how I would isolate things if I were me. And of course, I already did this a long time ago. So remember, we measured this using statistical analysis. So what we're looking at is the mean. Okay, what's the mean? Okay, M. But we don't actually care about the mean price. M isn't actually mean. M is equal to slope, okay? Which means, right, you have to measure the, oops, that was supposed to be vertical. let me do it over here. My pig mask is in the way. All right, so you want to measure this, and you want to measure, let's do this in a slightly different color, this distance relative to this distance, okay? So slope then is equal to rise over the run, if you remember 7th grade. And you'll see that the rise is not a rise, but a fall. So that's a negative number, okay? So we're measuring this distance versus this distance. How far does it fall versus how much does the distance change, right? So we call that slope. So basically you're doing, this is 90 degrees, right? So you're calculating angles. It's a little bit of geometry, but you're doing that statistically. So what you're doing is you're looking at the data set, you know, let's say closing prices of all these candles, right? And then what we're looking at is standard deviations. When you deviate from the mean, how far does it deviate below and above on average, kind of? You know, again, they're just different means, standard deviations, right? So we're calculating all of that. And the reason I do it is because you want to see when there is a change from bearish to bullish, right? You can see the breach, pullback, retest, roll, right? Standard, right? In this case, standard 1, 2, 3. 1 is the double bottom. 2 is the higher high, right? So this is 1. This is 2. And then 3 is the roll reversal. And you like this, okay? Cool. Okay, there's no pivots being used, not really paying attention to the Bolly bands, all that kind of stuff. That's just sort of why I have it this way, is you want to see either a creation or a resumption of upward pressure. And remember, I'm not necessarily a bull on pound, although I might be a bull on pound relative to euro, but I'm a bear on dollar. So that would say this is either going up or not going up. Now, I shouldn't actually say pound relative to euro. What I'm saying is pound economic data relative to European economic data. But I also expect euro to go up. And you say, well, Wayne, that's very confusing. You say pound is probably better economically over the next year than Europe because they took their pain in 2020, right? And so by 2022, they'll be in better shape. And I say, yes, that's true. But I also expect the dollar to be unbelievably weak next year, and that will push up the value of the euro despite how ugly the European situation is and is likely to continue. Okay, because they're going to get all their finance ministers together and say, wow, all our economies are being crushed by COVID. What should we do? And they say, I don't know, let's drink some wine, let's smoke some cigarette, and we'll talk. So they get together and they read poetry and they hold hands, and right, and they agree that they should be talking about it more seriously at the next meeting. Okay, a little facetious, yes, but nothing is likely to happen. Cool. Take a look at pound yen. Check that out. 53.5 to 154. Pachow. Okay? We call that a day trade. Swing trading bullish bias. Okay? Out of position. You should have already taken profit. So your day trade is done. Your swing trade is done. Let's check the position. And the position says a little higher, 50 pips higher for a conservative target. To look at it here, okay, 1, 2, 3 touches. This actually predicts the aggressive target. So that puts us here at 155.5. That gives you 150 pips up. Yes, and to all Europeans, I apologize. Yes, I'm being facetious in my example, but I think we could agree it's difficult to run an economy of, I don't know what it is, 27 different cultures, right? And everyone wants to have an opinion and equal weight, and they're like, whoa, 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 let's hear from Hungary. Okay. So it's difficult because what Hungary needs might be different from what Poland needs, and Poland might need something different from Portugal, and Portugal and Ireland are similar but different. You know, like all I'm saying is it's complicated. And I know from being a venture capitalist, even if you have something awesome on paper, and it solves a real problem and a real need, and then I look at what you designed and I'm reviewing your patent, and I'm like, holy crap, this is complicated. It could break when you're making it. It could break when you're shipping it. It could break when you're using it. And it could probably break just storing it. You could easily not know how to do it right and break it. Like I can see failure everywhere, but it's awesome idea, and it solves a real problem. People would pay money for it, but not if it's broken all the time. So I'm like, no, pass. Right? Pass. So complication, right? Something complicated is inefficient. Okay. Also, get ready for inflation. Now, as I explained in my macroeconomics course, there's a way that, that sort of the way we run our economy exports inflation. But nonetheless, there's going to be inflation when you give trillions of dollars to people that generally don't need it. You're going to get inflation. That's just that. And you'll say, what do you mean most people didn't need it? Well, 90% of people didn't lose their jobs. Okay. 90% of people didn't go on unemployment. 90% of people still had incomes. They just worked from home. They still had access to credit, right? Income and credit, all that kind of stuff was still available. And then thousands of dollars would just show up. Just show up. And you're like, what the hell is this for? This is for COVID. You're like, well, why? I still have my job. I work at home. Okay, I had to buy a new printer. But I don't need money for that. I have savings. And they're like, well, this is to help the waitress at Applebee's. I'm like, well, I can't eat at Applebee's. It's closed. The government shut it down. They're like, well, if you go to the movie theater, nope, movie theater shut down. Oh, well, if you go on vacation, oh, no, traveling is complicated. Hotels are complicated. COVID rates are high. I can't travel. What government, what am I supposed to do with this money? And they're like, right? Right? So anyways, now, and so I'll remind you, JP Morgan, I think the largest bank in the United States, saw deposits go up by 25%. And that means people that were not spending it. And this was at the time when GameStop went up hundreds of percent because people were just gambling. This is Dogecoin went from worthless to making billionaires, but the issue is it's still worthless. There's a market value on it, but no intrinsic value. So if you have the money to gamble, sure. Okay. So who knows? Maybe this Goldman Sachs guy got his $2,000 stimulus check. Didn't need it, so he bought $2,000 worth of Dogecoin, and now it's 20 million. And he's like, well, holy crapola. That's cool. Didn't need the 2,000. The guy probably made 2 million a month. Now he's going to go start a hedge fund, right? So anyways. So that's what happens. You get excess risk taking because if you put the money in the bank like a lot of people did, you don't even get paid for it. So some people are like, yeah, just throw that Dogecoin. I got to get into crypto, right? Oh, I'll use my free money from the government. Joshua said there were tons of people, right? Well, we can say, right, 10% were unemployment, so they needed it for sure, right? So if you were the waitress at Applebee's, then great. And then also I'd say a lot of people also had to spend, even if they didn't lose their job, there was this issue of childcare and stuff. And I think that's still a big issue right now. I think, I said unemployment benefits were one issue that led to a labor shortage. Remember, there's no job shortage in America. There's a labor shortage. So one explanation is, if you got really good unemployment benefits, then you'll continue looking for a better job. Another issue is if your kid can't go to school and you're poor, right? So like maybe it's a single adult household. Well, if mom goes to work all day, and Johnny has to stay in the house, you're like, well, Johnny's only 8. And Johnny doesn't go to school now because it's shut down. So she can't take the job. So I get that. Okay. I get that. And so I'm not saying, what I'm saying, like, listen to the message. Remember, I'm not political. I don't give a crap about politics. I'm not political. I'm not saying this is a Trump problem. I'm not saying this is a Biden problem. What I'm saying is deposits at JP Morgan went up 25% in this period. My mouse is not working anymore. Sorry. Okay. That's what I'm saying. And what that means is a lot of people, because this is like, you could almost say, if this is the largest bank in America and their deposits went up by 25%, then there's a significant amount of people in America that didn't need it. Well, they didn't spend it on rent. They didn't spend it on food. They didn't buy a new laptop or printer for their home office. They didn't go on vacation. They didn't put it in their retirement account. They just didn't do anything with it. That's what I'm saying. Okay? Now, will they spend it at Christmas? Okay? That's the big question. So if you're, and by the way, we covered this maybe a month ago. I said this is the thing that you should be concerned about. And by concerned, I mean investigating and investing based on this idea. If you're not thinking the end of the year, then how do you expect to know if the stock market's going to go up or down? Will the stock market be higher at the end of the year? Well, what about new orders? What about retail sales? Okay. My mouse is not working. Sorry. Factory capacity and utilization. Okay. We already talked about PPI yesterday and CPI. Okay. We already talked about that. Okay. And like gasoline prices being high in Atlanta, that's a supply shock issue, not that there's so much unbelievable demand. That's a supply issue. When you go to Home Depot, lumber is up at least 100%. Drywall is up at least 100%. Okay? Aluminum, steel, probably have doubled in prices. But that's because, so I called a aluminum factory the other day, 2 weeks ago. Oh, say that again. What? Yeah. I called an aluminum company, a manufacturer. And I'm like, hey, I'd like to place a big order. Isn't this funny? This is a true story. Right? And I said, when can I get it? And they're like, well, 11 to 15 weeks, but I can't promise that. It could be longer. And I said, why? Up until now, the factory has been working at 20% capacity because of COVID. This is factory capacity and utilization statistics, except I used a telephone. I didn't read it in a newspaper. That's a true story, by the way. I'm like, what? You laid off 80% of the workers? Oy vey. So anyways, that's that. So if you're a forklift driver, you lost your job and you needed the money. That's true. Okay? What I'm also saying is there's pent-up demand and not enough supply, and prices are high, so we shouldn't be that shocked. Don't be shocked in 3 years when prices are down and inventories are high. And you're like, why did that happen? Well, think about it. Let's say you're selling widgets, and suddenly there's a new demand. There's a new global pandemic, and the only thing that will save us is a widget. So suddenly demand jumps 100-fold for widgets. Okay, great. So boom, overnight, orders come in, and you sell out of inventory. And prices go up and up and up and up until a billionaire comes along and says, hey, I will give you $1 million for a widget. The problem is you don't have any widgets. So what do you think will happen by the end of the year? Every factory on the planet that can possibly make a widget will make a widget. I think in my macroeconomics course, I use fidget spinners as an example. Now there's so many fidget spinners in the world, you could probably buy 10 for $1, not $20 each. Why? Because they were so in demand, everyone that could possibly make them started making them, and now there's way too much, and kids don't use fidget spinners anymore. And you have a warehouse full of 1 million fidget spinners, And so some guy comes in, he's like, I'll give you a penny per fidget spinner. And you're like, okay, great. Because it's costing you money just to store it. So you're like, okay, get rid of this crap. I'll take the loss. And right, and you dump it. Now that guy puts it on eBay for 10 for $1, and he's making 10 times return on investment. But he's got PayPal fees and Amazon fees and his own warehouse fees, and at the end of the day, he turned a penny into 2 cents. Hey, not bad. But they were selling for $20 each. The problem is nobody had any. It's the same thing when you're a farmer. Okay? This year you planted wheat, but so did everybody else, because last year wheat prices were high. So now, because everybody planted wheat prices, when it comes to harvest, there'll be too much wheat, but not enough corn. Because instead of planting corn, you planted wheat. Prices go up, wheat prices go down, which means farmers are going to plant corn next year. There'll be too much corn, corn prices will go down, but wheat will go up. Okay? So one of the things that I've talked about many years ago was the government will tell you the data of which farmers are planting. Did you know that? You can track how much wheat and corn and barley and flax is being planted. So you could say, well, based on this data, there will be a higher propensity for a shortage in corn than typical years. So corn prices will go up. And then imagine there'll be less corn planted, so less corn than normal, less supply, higher prices, and then boom. Then you're hit by a drought. And not only is there less corn planted, but the yield per acre is lower than normal. And now you got a massive shortage and prices go through the roof. Now here's the interesting thing. You have 50% less corn as a farmer, but prices have doubled. So as far as you're concerned, nothing happened. But we look at this going, oh my God, prices have doubled. The farmer's doing so well. No, farmers don't do well. It's a law of nature. Okay? You get enough to maintain your combine. Maybe you get yourself a new Ford F-150. And that's that. That's the glory. Although, to be honest, I have met farmers that own islands in the Caribbean. Islands in the Caribbean. That's what we are. Yeah. But I think that's not normal. All right, cool. So anyways, piggy, can't you see? Pound killing the euro. Pound better than the dollar. Pound better than Noki. Pound better than yen. Pound better than Aussie. Pound better than Swissy. Cool. By the way, when I had that critique on pound dollar for the swing trading group last week, and I said, well, tell me your reasoning, show me the plan, I didn't really get that great answers. Dude, if you busted this out and said, well, look, I'm looking at pound and 4-hour chart across the board or daily chart across the board, and I see across the board strength, I would have given it to you. If you're like, I know it's a laggard, but this is the next to pop. Okay, great. But no one really said that. They're like, well, I bought it because I've been trying, I couldn't get it, and I bought it because everything else is going on, whatever, right? But if you said, well, this is my alpha, I looked at pound versus everything, and it looks hot. It's just struggling through this consolidation period. All right, I'll say, all right. Your conviction has convinced me. You got this. Okay? Can't backpedal. All right. Right? Yeah, Theta's talking about U.S. being vaccinated in other countries, haven't even really started. So one of the things, again, in the swing trading group we've talked about over the last couple of weeks is a staggered recovery, and that we will invest with that in mind. So yes, I agree with you. Okay. You can't compare Indiana to India, but we can track that data and we can use that to our advantage. Once again, we can assume Great Britain will be doing better than France 1 year from now. Right? Jean-Guy, yeah, good point. On the what was that one, Jean-Guy, on the argument? See, I'm all about the argument. I'm not about me being right because I don't know the future. But the argument is what I like, where if I say, what was the reasoning behind this trade? I want you to say, well, boom, 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 boom. And I'm like, holy crap, you just came at me, right, like a wildcat. Like, oh my God, if you look at this, the trend in this and the trend of that and this report and that report and what their trading partner here and their import, their export, their this, their that, this policy, And that's why I'm buying it. I'm like, holy schnicker. Okay, I got you. Now, I know it's hard to stand in front of the class and, even challenge a point of view of the teacher and all that kind of stuff. Trust me, I had to do that several times at Harvard. I understand how difficult that is. But you got to have that. I want to see the conviction. I want you to overwhelm me with the reasoning. I don't care about the point of view. Like, I want to buy a pound. Okay. My argument was, at that moment, if you just look at 2 or 3 or 4 other similar trades, they were just technically better. It's just technical analysis. But we didn't even cover the fundamentals, really. I'm just like, well, if all you got is technical analysis, then let's do technical analysis on Aussie dollar. Let's do technical analysis on Euro dollar. Let's do technical analysis on USD CAD. Those were better. So if you're like, well, I took it because of, I think somebody said, oh, I took it because of the M2. I'm like, what the hell? You don't have a trend. Right? What do you mean? You bought it at the M2 with no trend? Then you're telling me you're buying it because of an indicator, not because of a trend. I thought we were trend traders, right? So that's my argument. And if you're like, whoa, Wayne, well, if you're going to bring trend into it, let's go back. And then you throw down, something else and you challenge me, then that's cool. That's what I want to see, right? Yeah, Lumi, I think we're on lecture 9 or 10 now. Probably 10. Okay. Theta says, so Wayne, you believe May will do the seasonality strength for dollar? Once again, you're about 3 weeks late, Theta. Okay. That I covered that probably the middle to end of April. So now I'm preparing for June. So the stock market's coming down now, and I've already bought into it, and I'm looking for other things to buy. I've already exited some dollar short trades, but I'm looking to short again, right? So it's just like it reminds me of a quote that Paul Tudor Jones said in Market Wizards, where he'll come in and he'll move the oil market for a couple of hours. And then people come over and they talk about that trade with him. And they're like, wow, why'd you do it? How'd you do it? And all this kind of stuff. And he's like, I'm always bewildered because nobody ever asked me about the trade I'm setting up now. They're always about like what just happened and how do they get onto it and how do they get into it? How do they make, and he's like, so the fact that I did it means, he may have 2 or 3 other trades planned in advance. And he's like, I'm always shocked. They're talking about now, like now is over. now was planned out weeks ago. So they should be saying, well, what are you going to do in 3 weeks, Paul Tudor Jones, right? So it's the same thing like, yeah, the dollar's strong, the stock market's down. I know. I'm already in June, dude. I'm on the next road, right? Theta, I'm not going to tell you my personal plan. That's me, right? I explain the reasoning and logic, and very often I set up the trades, but I'm not going to ask such an easy question. Okay, that's like me giving you permission to do something. That's not the point. Okay, it's like one of these things. If you don't know what I'm saying, then you shouldn't do anything. Right? That's all. And I'm not saying that's what you're saying, but you got to be careful because there's other newer people here that are going to misinterpret that. And if I say that I'm a buyer or seller or something, they're just going to do that. And nobody's listening, and that's boring to me. Okay? I preach to teach, because some of you never had this. Number one, but born without a gun. I wasn't licensed to have one. The minute you see me, fear me. I am the epitome. A public enemy, used, abused without clues. I refused to blow a fuse. They even had me on the news. Don't believe the hype. Don't believe the hype. Yeah. Don't believe the hype. Yeah, Public Enemy. Man, they were good. My 98's are booming in my trunk. The funk. All you punks can't stop my dunk. It's so good. So good. Now you hear rappers, they get on and you're like, I cannot, he's slurring all the words. Like, what's he saying? And why is he saying it? He's got bitches and hoes and all his cars and he flies around in a private jet. Like, what a stupid song. What a stupid song, right? Public Enemy is trying to change the world, make it a better place. And this guy is singing about how many cars he has and how many gold chains he has. And you're like, what are you talking about? Like, who cares? Oh, they cry and sob now too? Yeah. All right. All right. All right, so yeah. So I'm looking for something to buy. Boy, oh boy, that CAD yen and crazy. So we have CAD being strong, kicking butt. Pound being strong, kicking butt. Kiwi coming down. Euro should be mediocre here and stuff. So it's interesting. We're getting what we're getting, but it's going to get. There's such a dichotomy right now. It's hard to believe the winners and the losers, right? There's such a dichotomy here. So Aussie, Euro, Kiwi, all down. So you're like, oh, this all sucks. And yen down, but they're like, wait, what? CAD, pound, what? So we've already seen this in the scan, right? All right. So look at that. How much dollar is rebounded. Okay. Let me say it again. Yesterday, I had a hard decision to make. Do I exit down here for profit? Okay, I shorted up here. Do I exit down there for profit? Why would I exit? It's just down, 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 down. Kind of glad I did, huh? And now I'm like, wait, role reversal coming up? Okay, so I'm over here now. So if someone showed up today and they're like, oh my God, why is the dollar strong? Because I made it strong. And I'm going to make it weak down here. Okay? Maybe a little higher. But yeah, you wait. But next week, I'll be making this week. It's what Dwayne do. Yeah, Stephen. I think the biggest change to rap, though, is girl rappers just coming out and, oh my God, the messages and the lyrics are just in your face. And not a message I want my daughter to hear, for sure. But it's pretty brutal and disappointing. Okay? Men have always been stupid, but now women are joining the ranks. Just blatant, gross sexuality. And, of course, 12-year-old girls are getting that message. And you're like, oh, my God. It's amazing. So I said, hey, do you know what Cardi B is saying here? I said this to my wife. My wife, just for whatever, just doesn't, she can't hear the words to music. And I like singing the words of music, right? I'm like, hey, let me Google this and I'll read the lyrics. And she's like, holy crap. I'm like, yeah, I know. And they're playing it on the radio. And this is what, high school girls are dancing to with their pom-poms. I'm like, oh, my God. Minaj, yeah. Cardi B's. Yeah, there's a couple others, too. And it's just like, holy crap. Oh, my God. And then I'm like, yeah. It's popular on TikTok. The best thing is when I have to translate. So what does that mean again? Oh, well, that means da 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 da. And she's like, oh my God. Yeah. Yeah, hope. That's what I'm thinking too. It's always been that way, right? In the 80s, you're like, oh my God, my son is listening to devil music, right? He's a devil worshiper. He just sits in his room in the dark, smoking pot all day, listening to Metallica. Yeah, now he's CEO of, AT&T. Linda's like, welcome to the new earth, Wayne. Yeah, totally. But it is scary. There are messages that I think are inappropriate for a 10-year-old girl, but hey, it's on the radio. And that's I'm like, oh my God. But anyways, so we're just sort of stalled out here doing what it's going to do. Stock market is open, so that's good. Uh-oh, looks like I got a Windows update. Oh my God. Windows update, everybody. It's going to be the end of the world. Nothing's going to work for 2 weeks. So anyways, make sure you got everything planned. What do you think? Does that look like a good opportunity to invest? Good luck with that. Okay, WETI going up. Obviously, CAD and Noki should be doing all right. What I'm thinking is if the dollar maintains some strength, it'll get me some opportunities to sell next week. So I'm going to say about 24 hours ago, I had to make decisions publicly. I think I was up 2,100 pips. And I said, hey, I have some serious decisions to make. Now, I said the day before, hey, I got serious decisions to make. Okay? So it wasn't a shock. But yesterday I said, look, we're at key points, key inflection points, and I need to make a decision. I've been delaying the decision. I've been waiting for technical analysis, and I feel like I'm in a spot where I should cull the herd. I should take some of my profit because we're at an inflection point where if I don't make a decision, then luck will creep in, meaning it'll keep going in the direction I was in, and I'll make lucky profits. But if I don't make a decision, I could have bad luck and it could go against me, and I throw away money that was already in my hand because I wasn't big enough, I wasn't strong enough to make a decision. Therefore, I'm weak, undisciplined, and unworthy as a professional trader. So I said, you know what? I'm taking profit on this one. I'm taking profit on that one. So I took 600 pips profit. Went from 2,000 to 1,400. And now I'm down to 1,300. But you got to remember, I had multiple other trades. So I would have given up probably 50% of the 600 pips I put in my pocket. I would have given up 300 pips in one day because I didn't have the guts, the strength, or the discipline to do what needed to get done. That is today's message. Because yesterday we didn't know if that was the right decision. I would have given 50% of my profits back because I have no value. If it's luck that determines how much money you make, then you don't got it. That's my message to you. Your value is that it's not luck, it's consistency. That's what we want. Russell's took a lot more. Yep. Remember, that was only on like 6 trades or something, right? Like, it's not even a lot of trades. It's not like I'm loading the boat. I'm not showing you that I can make 20,000 pips in a month or stuff. No, I'm just showing you how to set up trades. You should be in way more than that, right? 1,400 pips? Yeah, absolutely. Absolutely. Okay? There's lots of people in the swing trading group that are taking thousands of pips out of the market just in the last few days. Right? There are people in my swing trading group that have taken thousands of pips profit just recently. And does it mean we're over? It's over for the year? No. It was planned out. Now we're getting ready for the next new wave, if you want to call it a wave. And we're going to make thousands of pips more. Thousands. Wait, what? You mean 25 pips a day? No. Not scalpers, not day traders. We can do both those because if you're skilled, you can do anything. But what we're saying is we know how to set up things logically based on research and analysis. It's called macroeconomic research that creates your fundamental bias. You throw in some seasonality, it's not a problem. You're making informed business and investment decisions. Remember, if you're going to be a banker, an investor, a CFO of a large corporation, you get an education and then you can do the math. You can bust out the spreadsheet. You can plan in advance. What's the cost of financing? What's the growth rate? Great, let's put that in a model, base case, best case, and you put out these scenarios, and then you can make informed decisions based on analysis, not guesswork. And we take this and apply this idea, and we apply it to the foreign exchange market. Before I was a trader, okay? Before I was a trader, I was an investor. high-tech startups in the Silicon Valley. I've helped raise millions of dollars, right? And I've invested into over 100 patents as a venture capitalist, managing a team of investors, right? And so what I'm trying to say is being an entrepreneur, being a business person, being an investor, not a trader. I never invested in the stocks and all that kind of stuff, right? Right? As a venture capitalist, that's silly. The stock market's a way to get out, not a way to get in. So, bringing this mindset to Forex is how I created my process and decision making as a business person. I'm not a businessman, I'm a businessman. So, yes, I say, oh, let's create a business plan. Let's do some analysis. Let's plan out the rest of the year. Okay? And I found in the beginning when I was just a day trader, which I still love day trading, okay? I did well inconsistently. And I wondered what the next thing is. And then I got caught. I can't even remember what it was, but I was in a process of doing really well for a couple of weeks, and then in 1 week I'd give a lot back, and then I'd do really well for a couple of weeks, and then I'd give, right? And I started learning about the news flow and all that kind of stuff, and I still knew nothing about fundamentals and all that kind of stuff, and inevitably I went through a bad period, and then I'm like, oh my God, I gave up my job to do this. Okay? I gave up my job, my career, my safety, my retirement account, my benefits, right? I gave all this up. And now I'm losing money for the, right? What am I doing? And then I realized the key to my success in previous businesses, okay? The key to my success in the nonprofit world where I managed thousands of people, okay? The high-tech startups I was involved in, these had business plans. And I surrounded myself with the best, brightest talent I possibly could surround myself with. And I said, oh my gosh, as a currency trader, I don't have a business plan, I barely have a business model, and I don't know another currency trader. So how can I surround myself with like-minded, successful, driven people if I don't know anybody else, and if I don't know another Forex trader? And that was the beginning, the genesis, if you will, my origin story, if you will, of how we all got here. Now you understand that I look at Forex like a business, right? And we can analyze this and make intelligent decisions beforehand. It's not a game. I don't show up and figure out what we're doing. Oh my God, did you see the London breakout? Oh, I got my London breakout strategy. Did you see the, what did somebody ask about the other day? What was it? The alligator. Oh, did you see the alligator? Oh my God, I guess I need to buy something now. Gee whiz. Gee whiz. Oh my God. What a horrible existence that must be, to make decisions because you've pulled an indicator off this chart and it made a decision for you. It's fool's gold. It's fool's gold. It's a mirage. You'll cross the desert to the oasis, but you never get there. You just find you're walking across sand. A little farther, a little farther, a little more, a little more, a little more. You're crawling on your hands and knees now. You're almost there, and bones. Your bleached bones in the desert. You never found the mirage. Okay? Such a distraction. I want you to learn price action and pivot points. Those are two leading indicators. I also want you to learn macroeconomics. That's your third leading indicator. And from that, you can use any tool you want. But the tools don't make the decisions for you. If you have three leading indicators, price action, pivot points, and fundamental analysis, you'll do just fine. I don't care what tool you're using, because you're buying dips in an uptrend, you're selling rallies in a downtrend. If you can do that and you can predict the trend before it happens from your hardcore analysis and your decision-making processes, then you'll just have a better business than everybody else. I want you to build a better business. And businesses do one thing in exchange for money. They create value for their customer base. Whether you're your own client, whether it's your father-in-law who's your client, maybe someone at the country club becomes your client, maybe one day you manage money for small institutions or small companies. Doesn't matter who your client is. They come to you for value creation, and you say, well, oh my God, that's what I do. I provide value. And that's called a business. And businesses make money, and they're sustainable, because as long as you create value for your customer base, they keep showing up for more value. Okay? And that means you can take all this in, you spend lots of time analyzing and thinking until the point you can make a decision, and then you can use any technical analysis you want to execute your trade plans. If you're great at technical analysis but not happy with your results, it's because you don't know what's happening or why it's happening. That can be fixed, and your results will increase. I don't know if they'll increase modestly or exponentially. That's up to you. But if you can't answer why, then when is irrelevant. See, your charts tell you price and time. So you can make a decision on what price and what time. You can use any indicator you want. But if you don't know why you're a buyer, or when to not be a buyer, or when to become a seller, then you're just got price and time, but there's no reasoning behind it. So you'll do really well while it's doing really well, and then it'll take you a while to realize whatever has been happening good for you is no longer happening, and you've given back. So I don't know if you do well for 2 or 3 weeks and then go back to break even, or do well 1 month and then give back the next month, or do well for half of a year and then give back the second half. I don't know if you have one good year followed by a bad year. It happens. It's even a cliche. The issue is, what are you doing so that you can create value through your research? You develop the right bias, and then you have the patience and discipline to execute your technical strategy that's congruent with your fundamental bias. If you can do that, you have a business, a sustainable business that creates value. And first it'll be you, then it'll be your clients, and then from that, as someone said earlier, I think it was Greg, your Forex will fund all your other initiatives that you care about. If you have a problem making too much money as a Forex trader, and you're like, Wayne, I never did this for a yellow Lamborghini, then start a nonprofit organization, right? I own the Wayne McDonald Foundation and Trust. Cool. So it does things. It gives you vehicles to do things. Great. So then get involved. But it's sure nice to have money, because money is a resource and you can put resources to work. So if you're going to help your community, your neighbor, a family member, a local charity, a hospital, society in general, it sure helps to have money. It sure helps to have money. So let's get that taken care of. Let's fix that money problem, and then let's do something interesting. And that'll be the basis of our relationship. All the interesting things you're going to do after the money part isn't a problem anymore. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Remember, leave comments under the video, and don't forget to click the thumbs up. Click the likey, and I'll see you tomorrow. Cheers.